charts today. We're going to take a look at this PowerPoint just quickly, as you know, just a minute or two to go through some things, and then we'll take a look at the charts. Probably start with the euro and pound and move on from there, okay? So just want to do a quick check if you could first of all hear me. If you could write, if someone or a few of you could write a Y or a yes, just to check if we have audio and visual. Okay, great. Thanks, Elkana. Perfect. Alrighty. So as usual, the risk disclaimer explaining that trading foreign exchange and global financial markets in general is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar is for educational purposes only. Thanks for that attention. And I'm going to go through the introduction quickly here, explaining that, of course, this is our live trading room on Tuesdays, Wednesdays, and Thursdays from 7:45 to 9:15 London time. All right, and take a look at those time zones underneath for your local time. All right, my name is Chris Svorcik, hosted by Admiral Markets. You're going to see me live, trading live my own money, and especially focusing on trading strategies, and we'll be looking at these types of trading styles. From August onwards, we're going to do it a bit differently. We're going to do a split, actually, so certain sessions on Tuesday, Wednesday, Thursday have more of a focus than now. I mean, in the sense that now we kind of look at all things, which is you know, a disadvantage that sometimes you miss actually stuff because you're focusing on everything. So we want to do it in August. We want to focus on a particular part of the session. All right, on every day. We'll be especially looking at breakouts. And breakouts are these zones here in black. For example, when you get a move down, in this case, and a sideways zone, and then once that zone breaks, that's a breakout, of course. Just a quick explanation. And you can follow us, please, Admiral Markets at Facebook and Twitter. With that said, let's take a look at the calendar first of all. This week, if I remember correctly, is really a very light week in terms of news. Yesterday was only the US dollar retail sales, if I remember correctly. And today we have nothing. Yeah, only Euro Spanish 3-month bill auction. Well, that's very light impact. And then basically the whole day only CAD core retail sales, and that's 5 hours, 40 minutes from now. So there's nothing regarding the news that will affect our trading. Now let me open the charts. Somehow I have to, I don't think you're seeing the charts at the moment. I have to drag them to the screen here. Yes. Now you should see it. Good. Let's see. Let me get rid of this and let me scoot over to the pound first of all, and the euro, or maybe the euro. Let's start with the euro. What do you think, first of all, of the dollar? You know, till now the dollar has been quite wedgy type. I mean, we had that huge weakness after the FOMC. That's almost 2 weeks ago. That's tomorrow, 2 weeks ago. We had that huge spike. Ever since then, the euro has been at least going hardly anywhere. It's been bouncing around 130 and 131-ish. Now, yesterday and Friday, we did have finally some upside momentum, and finally we broke that top that I've been already talking about last week for a long while. That the break of the top is very, very likely. The only question is when and how. So that finally happened. But now that it happened, you know, it happened in a very mildish, very slow manner. So I'm curious how the dollar index actually looks like, because in a way, the minimum requirement has been met. the one I was talking about last week constantly. So the question is, has the dollar reached actually a point of support and the euro dollar maybe a point of resistance, or are we going to get some continuation of that break of the top? Now, one way of doing that is, for example, putting a fib on this down move and seeing if there's a natural resistance level at the current spot, which I wouldn't say so, because the 618 more or less was the stopping point of that FOMC spike. And the next fib level, major fib level, is 132.75 at the 786 fib. So that doesn't seem so. If we would put the fib on the spike here, the FOMC spike, you can see that the target, the minus 270 target, lines up neatly with the 886 fib. All right. So that hasn't been reached either. So there could be, in theory, some space maybe for the upside continuation. One way of measuring if we stay in upside mode is, for example, this trend line here. We broke out of this top trend line, the top blue line, yesterday or the day before, maybe even Friday, right? We broke out of that wedge and kept moving to the upside slowly but surely. Very slow increments to the upside, so slow that it's very tricky to catch. All right, so this wedge we definitely broke out now, broke that top that I was talking about, so that minimum requirement has been met. So these are support lines that we preferably would want to stay above. You can see that the moving averages, the slow moving average is getting an angle to it. Price is above it, so we're definitely in a bullish mode. Now, price action is showing some retracement here. So to me, it looks like if you put a trend line here on this smaller upside, it's like a channel. We broke out of that channel, as you can see. Look at that. I will make the color a bit different so you can see it better. So it looks like at the moment we're breaking out of that steeper channel, as you can see. But considering the evidence that we've been looking at in total so far, let me make the channel green. I think even despite the fact that we're out of this channel at the moment, the likelihood of still some upside continuation, although the currency is moving very slowly, is still good. All right, I wouldn't be looking for shorts even though we broke out of this uptrend channel, just because we are above all these support levels. It's risky in my regard. I know that certainly that some people will probably be looking for shorts, even though we're making higher highs and higher lows, even though that price is above the moving averages. But you have to realize that any trade like that is severely counter trend and requires a lot of experience, and you could see this currency turn at a dime at any spot to the upside. All right. So personally, I rather focus on the upside, in my opinion. Now, I wouldn't trade it right now, because if you look at the current price action, you can see bearish 1 hour candles. You can see a break of that trend line, that channel we talked about. But then again, we also broke out of those dark blue lines, and we're above this lower blue line. Let me change that to something like purple. So we're above purple, above those dark blue lines that we broke. So to me, looking for a long makes more sense. The only question is where and how, in my opinion. And is it something anyhow we would like to trade? I mean, looking at the speed the currency has moved, one could even wonder if it's that attractive to trade, because of the fact that you can see that just the speed at which it's traveling is not making it very appealing, maybe. But so those are my thoughts. What do you think of this euro dollar? What are you looking at? Just get some feedback here quickly. I think any good 1 hour signals, 1 hour bullish candles, for example, reversal candlesticks on a 1 hour chart, could be an indication that we're going back up. any break, for example, above this trend line here could signal continuation. Above this orange, let me make it orange. So that could be a continuation signal when we break above that and maybe go back into that trend channel. We could even use fibs, of course, to indicate where we could stop. I would use probably the 4-hour chart for that, because 1-hour chart, well, 4-hour chart could be a bit big, but not sure if we'll make that big of a correction. If we were to make that big of a correction, let me take off the other fib so that things are clear. Then 382 could be a bouncing spot, right? At 131.60, or the 50 fib at 131.40. So those are just a few pips below here. We're at 131.80-ish, 55 now, 85. So, you know, those could be support areas. Even though we might turn, even though this small break at the top is all that the euro does, and we break this purple line and just continue, even if we were to do that, the likelihood of a bounce, you have to realize, the likelihood of a bounce here is still substantial. Even if it's a bounce back to resistance and then a break. Currencies always move with ups and downs. So even if it were to be a bigger turnover and the euro upside is over, is toast, then normally speaking, it goes in waves, at least to a certain degree, and then when you get the break, you could get a bigger break, of course, and there could be a longer sustainable move in almost one go. But usually, before that happens, you do get a bounce, especially if you're in such a support area, in such a support zone. All right. So I got some comments. Some are saying that the euro dollar is too slow. The other, looking at history, thinks that the price will drop. Bogdan thinks that. Akana saying that it looks like a sideways zone, which it is. But it has a slant to the upside. Because if you connect the bottoms, you can see that slant. If it were to be an exact sideways zone, we would have something like this, of course, right? There's no price action here. But it definitely didn't travel that far. So, all right, maybe let's take a look at the pound quickly, or we can take a look at the euro on this chart to see. Now I know that in all situations you have to realize you have bulls and bears, all right? And everyone probably has good reasons for that, in fact, all right? That's why you have to define what you look at. And in my opinion, what I value is defining the trend. And I have a certain way of defining the trend. So even though all the bears in the world could be right at the moment and this is going to drop like crazy, it doesn't matter for me. Do you see my point? It's totally irrelevant for me. Because I have my definition of trend and I stick to that. Because if I would start changing, that, I wouldn't be consistent. And I look at the 4-hour and day chart and I see still, that hasn't changed, higher highs and higher lows. So by definition, I'm only looking for longs and not for shorts. And but I will only do that at logical spots. If you look at that, this view, do you like this chart, by the way? Do you find this interesting? I think it's a cool chart for trend definition. And if you look at that, you can see green candles above moving averages, just like this 1-hour chart too. And all what we're doing now is a slight light green retrace back to the moving averages. If you look at it here, it's quite simple and clear. Even the day chart has green candles. Everything is up. So that's just to confirm. Let's move on. I don't want to bore you here, but I'm only going to monitor euro dollar and see. We can take a look at the 15-minute world quickly to see if there's any long opportunity, basically. I hope I forgot about that template I wanted to do. Of course. All right. I'll have to still fix that, but let me just quickly add a 89 EMA here. And I will add a MACD. I forgot the values. Does anyone know the values that we discussed in the live seminar by any chance? I'll have to look it up. All right. Taking a look at the smaller time frame here on the euro dollar to see if we would have by any chance bump into maybe a shorter time frame support area. But looking at the 5-minute world here, the stochastics is about halfway. Not indicating necessarily an oversold area here, but this is the 15-minute world. Maybe we'll get the bounce. I'm definitely going to keep an eye on this, but nothing as yet. Okay, maybe this trend line, for example. Let's take a look at the pound and see if we have a London Open trade by any chance. London Open just opened 2 minutes ago, right? Now this trade hasn't really occurred that much, so let's see maybe today, just quickly. I haven't looked at it. I always keep an eye on it, but I don't always go look at it with you because I don't want to bore you here, but it's something I always keep an eye on. So let's see. The zone of the London Open is between 4 and 6 GMT, as you probably know. And we're looking for a break of that zone after London Open, but only a break in the same direction as the 89 EMA. Let me quickly add the 89 EMA to our chart. And you can see that the direction is pointed to the upside, and the currency is now moving to the downside. So that's counter trend. That's not a break that we're interested in. So that's unfortunately hasn't happened again. The pound broke out of this blue resistance line yesterday and has reached the 618 fib. To me, that would be quite a substantial resistance area. So I wouldn't be surprised to see the pound move down today. So it's a bit different than the euro because it has reached. You see, the difference is with the euro is that the euro is in the middle of nowhere, in my opinion. So upside is more likely. The pound is different because it has reached a significant level. If you look at the day chart, you can see that if you put a fib on this last down move, it missed these, or kind of touched the 618, or missed it maybe by, what is the difference? Yeah, 10 pips. So that could be considered a hit at that fib. That could definitely be a major resistance level. So I'm cautious on the pound because it could see a bigger retrace because of that. But here too, we even more than they did in the euro, we broke this high immediately. We broke it again and again. So the pound actually showing more breaks of highs and higher lows than the euro, in fact. The only difference is that we've reached this resistance, which makes it iffy-ish, and therefore I would only attempt it if we really push above the 618 and this top, all right? Because otherwise, as I said, the likelihood of a retrace is definitely decently significant enough for me to be cautious, all right? Yesterday we had a good upside continuation here, a few hours, and we're kind of making a flag, right? Typical continuation pattern. The only thing is that this continuation pattern is happening right in the resistance. Doesn't necessarily mean that we can't move up. It's all about statistics. It's a probability. For me, I like the flag. I like the uptrend. I just don't like the fact that it's happening right in resistance. So I would be cautious with the break of that flag, and really want the break of the 618. Otherwise, you can see on this 50-minute chart how nicely uptrend this is, how price every time it moves back to moving averages is finding support. You see that? And this bit was the most impulsive. It's just moving up and up and up, more than the euro. All right, so yeah, the only thing is that's really a pity. Otherwise, it's a very nice flag. So maybe this level itself here could be the support, or do we move a bit lower? Time will tell. All right, if we do move a bit lower, that could still be a better spot actually, because there's more space to the maybe from the resistance here. Now we're pretty close to this resistance, right? So the space there is becoming less viable. Let's take a look at the euro pound. Euro pound has been very wacky, in my opinion. I mean, it has been stuck in that sideways range for ages, right? But anyhow, we're back at this broken level. So this could be a bouncing zone for the euro pound, which could tie into the fact that the euro might go up and the pound not so much. That could send this euro pound to the upside. So let's see. That would be, anyhow, that sums it up what I'm thinking about the pound and euro at the moment. Let's see if there are any price action signals. Well, big bullish day, and you can see why I don't want to go long here. Because what is one of the things I always say that I don't want to go long? Does anyone know? If I'm looking at a day chart. Always want to be careful with that. Does anyone know? Extra bonus points. What is a crucial thing to look at when you're looking at day charts and you're trading intraday? Or even not, even if you're swing trading, still, whatever. Okay, Daniel says doji, but that's the current candle. I wouldn't look that much at the current candle because it's the day just started and it doesn't have, the candle's far from closed. So it's always good to look at closed candles. So in this case, because the candle's in closed, the only thing we could do to see price action of today is really look at the 4-hour chart and 1-hour chart. Akana says high. High. That's true. It's higher high. That's for sure, indeed. That is important as well. It's not what I was hinting or looking for, but that is true. But something else. Fib level, yeah, but that we talked about that. It's something new, something we didn't talk about. But that's true, fib level, and we are making higher highs, higher lows on the candles themselves as well. Okay, doesn't matter. I'll say. Basically, it's yesterday's high here is at 153.83. Now, I never like to go long right in front of a high, a daily high. Those are difficult to crack. They're not easy. They're well respected. They're well known. Those are levels that key players are well aware of. And it's not a subjective line. Usually, more or less, the level is approximately the same for the majority. So we're 17 pips away from that yesterday's high. So that's another reason why you want to wait for that high, either that high to be broken, yesterday's high to be broken, which means that resistance is broken, or wait for a square up retracement of yesterday's candle to support levels. So yesterday's low was, for example, right here. I'll make that green. That was yesterday's low. So any move down to test that low could definitely find support. All right. That yesterday's low is 152.60-ish. So that might be a level that isn't broken easily. So that's good to know. If the pound were to retrace lower, then we have an idea at what price we could definitely find support, because that's also actually going back to these broken tops here, as you can see. So any move down to here, the likelihood of finding support in this zone is very high. Now we might not get there, as I said. So either a break of these two levels, or if we do move back to support levels. Those are the only two areas where I'm basically interested in the pound. All right. So otherwise, besides this, I had on my list at least the Euro CAD. So let's take a look at that. I had on my list the Euro Yen, the Pound Odd. I want to take a look at the Aussie dollar with you, and maybe the Aussie Yen. All right, so I would suggest that. But if you have something you want to take a look at, and you find an interesting setup, let me know. We can take a look at that. Or if you have a question on trade management and you want some feedback, let me know as well. Alrighty. Let's see. Let me quickly start maybe with this day chart. Let's see. We bounced off a 50 fib here recently, as you can see, of this up move. And we've moved up so far on this day chart. 4-hour chart, you can see that a bit better. Alrighty, let me change this a bit like that. Okay, now you can see that the 50 fib bounce was pretty strong, but in the meantime we have many tops that we can connect, and we have a pretty nice trend line. Now there's also maybe some bit of a horizontal level almost, or it's a trend line with a slight shallow angle. These two resistance lines will be important, because if we break above that, that could be a continuation of this 50 fib bounce, which would mean that the target is minus 272 at 140. So that's like 300 pips once we break that orange and blue line. So that's one trade, first of all, that could be very interesting. Now the question is, will we break that, or are we going to bounce actually off these trend lines to make a correction to the downside? If we do that, one way of measuring this fact is by maybe placing a trend line like this, which we're actually breaking right now, although it's difficult to draw. It's a bit iffy here how to draw it. Let me see 1 second. It depends how you draw it. Maybe we'll take the more conservative line like this, and we want to be aware of that support level as well, the horizontal support level. And this is a daily support level right in here. All right. So in a way, we're at an interesting spot because a break to the upside would be lovely. Trend breakout for a few hundred pips to the upside. But even if we were to break this support, basically, these support levels, then maybe we're making this whole entire correction expand, and we could see a continuation of that to the downside. You can see on the day chart, we are making lower lows and lower highs here. So this fall, maybe to the 618 fib would also be interesting. So both sides pretty interesting. That's why I wanted to show you the EuroCAD. Found that an interesting currency. It's at a talking spot, an interesting bounce or break area, and these are my key lines. Now you want to maybe be also aware of this resistance level. So those are the key levels, the horizontal and trend lines. All right. So, any questions on this? Before it breaks, if it would break the blue line, for example, there's maybe a smaller trade to the top. Once it breaks the orange line, there's a smaller trade to the red line. But once it breaks the last highest red line, then there, of course, there's the most space. Just as the same story for the downside, although I wouldn't be looking for a break of this orange line. Because why? Because there's not enough risk to reward to the next support level. That's just a very small space, so I wouldn't be interested in that. Only banks can take that trade because they are not using stop losses in some cases, so for them, or they're scalping it to that level, it's a bit different. So anyhow, that I found very interesting. Let me know what you think. And I also found the Euro-Yen interesting. Yeah, the Euro is getting some bounce here. Wow, pretty significant bounce. Yeah, it's a pity. I was looking at if this was an oversold area for our stochastics, but it really didn't reach there, unfortunately. But it did move. It did move up now some 50 pips. But maybe we'll see some retrace from this level because we are bouncing, or we are back at maybe a resistance level, right? If you look at the 1 hour chart. Really interesting to see. Definitely Euro getting that traction we were talking about the possibility of upside because of that, just making that higher highs and higher lows. So let's see. Let's see how this candle closes in 40 minutes from now. That should be pushing the Euro-Yen to the upside, though. That's what I was looking for here. Or maybe the dollar-yen is moving a lot down. Let's take a look. Let's take a look at the Euro-Yen. I found that also quite interesting. But before we do that, I'm just going to answer quickly Ed's 2 questions. So bear with me for that. Ed is asking, or asking, observing that our trading room is closed Monday and Fridays, as you know, and is asking me if that's because I don't trade those days, and that is adding that he doesn't as well. I think that, yeah, the reason for those 2 days is that indeed the market is very slow. So I do look at the market to get a feeling for the market, to see if there's anything that could be interesting. And when I mean interesting, really, really interesting, some position trade that I feel has either merit for development for the rest of the week, but I don't take intraday trades very often on Monday. There are some rare occasions. I remember taking a euro odd to the upside because it was in such a massive uptrend, and it broke on Monday, so I did take that one. But indeed, that's it's less the likelihood of looking at substantial movements and finding interesting spots in a way is definitely less. Question number 2. Let's see. Ed is observing that I'm looking at low liquidity pairs like Euro CAD. Would you not agree it's safer to trade high volatility pairs like Euro Pound, especially as it's summer trading? I don't know if it's necessarily safer. It all depends on your trading strategy and your trading plan. Now, you have a point that summer trading could affect the market, but I think that it could affect the entire market. There could be some currencies that go into consolidation more than others. That is true. So you have a point. But if that has to do with the currency pair or just the current market situation is the question. I think it's I think it's definitely very high impacted also by how the currency is situated and what kind of structure is it located. There could be one cross that is trending or in a big consolidation and could trend just because the majors are actually bouncing up and down, but its crosses are actually moving in one particular cross. You know, it doesn't have to be the Euro CAD necessarily, but sometimes actually when the majors are standing still, there's another cross that's moving. So I think it really depends on each structure by itself. I don't think you can really say all the currencies that are not euro dollar or pound dollar are not moving, if you see what I mean. I think that wouldn't be the case. But in general, the fact that it is summer does affect the entire market, and the likelihood of breakouts maybe moving as far as they would before that is definitely decreasing, especially now that we're approaching August. And that's why we won't have a trading room as well next week. We'll be back soon, though, the 5th of August, which also would not be the greatest trading, but so it's a very good observation. First of all, I just probably would focus on the entire Forex market. I wouldn't say necessarily that the euro or pound are that much better. Personally, it really depends on the market structure. But you know, if you did a lot of testing on that, because that's not something I've intensively tested. It's not like I've gone through dozens of currencies and looked at the effect of the summer on each of them. So maybe if you do that, you will find conclusion like the answer to the question you've been asking. All right, so that I haven't done. The euro yen, I think, is interesting, and this is, definitely a currency cross that is I wouldn't say is low liquidity. Euro yen is definitely one that moves a lot, and it's an interesting spot. Let me move out to the day chart just because we are in this uptrend here still. Furthermore, we broke out of this correction here and this correction, and we broke out of these blue horizontal distances. All right. So not only did we break out of those corrections, but we also broke out of the major 131.10 level. Now, why was that major? Just because of this head and shoulders pattern potential. That looks very unlikely now because it's just the right shoulder doesn't match to the left shoulder at the moment, but who knows? So that upside is interesting in my opinion. We're making higher highs, higher lows. The only thing is that recently we're making now kind of a bull flag, and if we put a fib on this upside from the bottom to top, you can see we hit the 382 and made a pin bar reversal candlestick pattern on the 4-hour chart. Not only that, but if you look at the place where we bounced or are bouncing, it's quite close to this support level here. And also maybe this top here that was broken. Also this zone, this entire zone, supply-demand zone. All right, you can see that's where the buyer stepped in again, right, at that 382 and supply-demand zone. So the upside could be interesting. We broke out of, as you see, this orange line, and we're now making a bull flag after bouncing off the 382, as I said. So any move up here could be a good continuation. So one way of measuring that is if we break, for example, above this trend line. All right. That would be a good indication that the euro yen did find a lower high here after bottoming out here. And if we break that orange line and this top, then we have a higher high as well, and we're breaking to the upside as a continuation of this previous upside. And then this downside correction is most likely toast, and we're continuing to the upside. So I like that trend line. I like that break if it were to happen to the upside. I think that could be a great trade. Let's take a look if that could happen right now. What are these blue lines again? Ah, yeah, those, okay. So, yeah, the euro dollar and this one, definitely interested in trying to catch. Taking a look at the 50-minute chart to see if I'm interested in the break of this 15-minute high or this one. All right. So I'm trying to judge which one is better. Now the advantage of waiting for maybe the bigger high to break is that you're also breaking a 1-hour resistance level, which is useful. I mean, going long right in front of that resistance level is maybe makes it a bit more iffier. You can see this is a huge 4-hour candlestick pattern with a huge wick at the bottom and a bullish close. So that definitely, signaling that the support kicked in at this level. The AO is almost back. The oscillator is almost back to the zero line, indicating that this retracement could be finished. The only thing that's maybe worrying is the fact that there is some divergence between these stops. And that might signal that we see a bigger correction to 50 fib or maybe to 618. So in that regard, because of that divergence, maybe it's better to wait for a full break of this bigger 1-hour resistance. Let's see, that 1-hour resistance level is around 131.48. It's only 20 pips away from here. Looks like we bounce off the 50 fib of this first move up. Then the target will be this minus 680. minus 618 is around 131.90. Doesn't have to mean, of course, that the currency stops here. It definitely could continue, but I mean, for this smaller trade, that would be the target, right? Because after that, we could see retracement and then continuation, but that's something of later concern, if you know what I mean. So yeah, I think that could be interesting. Definitely, I would like to see, well, what I would really like to see is a move up here, a respect of that trend line, and move down into the next break. Because then the stop loss is tighter, the entry is tighter, the risk is smaller, therefore, of course, logically, and the target is still the 618, and you can see then the risk to reward box is becoming a lot better if that were to happen. So something like that would be awesome, because then we're probably getting close to a 3-to-1, I would say, looking at the sizes of those boxes. While if we were to wait for a break of if the currency were to move in one shot to the upside and we would take the break of this, and the stop loss would be here, then the reward to risk boxes are kind of even to each other, looking at the current situation, which would be okay, but would be less appealing. So I'm going to keep an eye on this with you, if you don't mind. Wow, the euro dollar is reaching the 1 hour resistance here. Had another 5-minute up move. Another 10 pips up here in the last 5 minutes. It's a shame that stochastics wasn't a bit lower. Would have felt a bit more comfortable taking a long on this smaller time frame if it were. If it were, I've reached that oversold position here. There was definitely always a likelihood of a bounce, but looking at the 1 hour chart, we had some bearish, price action signals, so was maybe in a way hoping for a bit deeper retracement, if you get my point. But wow, the bull stepping in already quite soon. So that's the euro yen and euro dollar. What else was on my list? The pound odd as well. That's a currency that loves to travel a lot, just like the euro odd and euro New Zealand, pound New Zealand. These currencies, I don't know if you look at them, but they move 50 pips in as if it's nothing. Something that the euro probably would take a whole week to do, but does anyone have, before, I'm kind of tempted to focus on this one for the moment, but I don't want to bore you either. But I want to keep an eye on this. So maybe we could take a quick look at pound odd, but I'll definitely go back to the euro yen and euro dollar regularly, or euro yen especially. Euro dollar, I want to see how this hourly candle finishes actually. The pound odd is kind of in a talking spot as well, in my opinion. If you look at this 4 hour chart, for example, you could see this bigger bull flag here. If you exclude this, if you cut through that bigger top here, like this, a bull flag, maybe, or if you were to take maybe a resistance line like this, and maybe a support line like this. So it looks like we're relatively at the top of a bull flag. Maybe on the day chart you can see it a bit better. All right, massive up move, of course, on this pound odd, traveling almost 2,000 pips probably. And you can see, I made a lot of good breakout trades on this in May, and you can see in April, and you can see why, because that's when the currency was traveling a lot. And this part is just a lot more trickier. isn't it? Maybe not a bull flag indeed, Ed, you're right, but it is definitely still a resistance line that is of interest to me, because if it were to break above this, AO is back to the zero line, and if it breaks above that trend line and breaks above this high at 167.70, then probably, it's difficult to imagine after such an up move, but probably this was just a retrace, a pause, and we could see a continuation, one more continuation of this previous uptrend. I know it's difficult to imagine for some of you, but and probably a lot of are anticipating a turn here for a deeper retracement. But the point is to put lines and key support and resistance lines that we can identify the likelihood of a currency doing something. And no matter if you're bullish or bearish, it really doesn't matter. If you break above that trend line and you break above that resistance line, the likelihood of it to continue up is very high. So definitely a key level. But you could have a point there, Ed, and I'll just use a different term there. A pit stop for breakfast. Okay, I can imagine. I need some coffee too, but I can't reach the water can. So so yeah, but the opposite would be true too. I'm not blind for the fact that this could definitely be a lower high here, and we're in a wedge, and a break of the wedge to the downside could be equally interesting. I'm not oblivious to the fact. In this case, you know that usually I like to trade one side of the story because my job is to identify the trend. In this case, we are in a situation that, because of the day chart is in such a massive correction, as you can see, this is not a small correction. We're talking about something like 10th of June here, you know, that it's been going sideways. So in this case, an upside break would be great, but a downside break would also make sense, just because we're, you know, probably continuing this correction and then expanding this correction. So, or maybe even falling deeper and retracing deeper. So in this case, both sides could make sense. One way of measuring that, how would we measure that the downside could be in play? Well, maybe this trend line, for example, right? A break of these moving averages, a break of maybe this support level on the 4-hour chart. Be aware of this support level as well, right? Those are all levels where the currency can bounce. Basically, the currency is always testing support and resistances, and the likelihood that it bounces at support and resistances, even if there is a trend and a momentum going, is quite high. That's why it's very good to be aware of the support resistances. Yeah, the Aussie pairs are indeed tricky, Ed. Especially the Aussie dollar, I would say. But all of them, even the Euro New Zealand, Pound New Zealand, all of them are in tricky spots. And that has definitely, you can see that very easily if you look at that day chart indeed. And you see what recent price has done. That ain't easy to trade. That isn't easy. But still, I like the trend lines. I like the consolidation area, and if it were to break one of these two, be aware of the support resistances, but it has a decent chance of moving within these levels. Now, if we were to compare this pound odd to the euro odd, yeah, you can see it's quite similar in a way. Here too, I had a blue correction line, as you see. We broke out of that, but where did we go to? Nowhere. All right, so we I actually took this trade on the hook back, on the pullback, but have in the meantime taken that trade off because it didn't go anywhere. Now, it might still move up, but I don't care. The trade idea was a break, pullback, continuation. What we got was a break, pullback, failure, pullback. Then the whole idea is not so interesting anymore. We could easily, in fact, see the opposite, and the currency could maybe do this and correct lower. All right, looking at the structure. Is it something that I'm interested in? Not at the moment, not at the current spot. Maybe if we were to break below these support levels here, then maybe. Still have to be aware of the 618 fib and 786 fib. Then the analysis would change. But at the moment, we're still above support, so I wouldn't be looking for that. But the upside is looking iffy. So definitely Aussie pair is definitely difficult to trade. I would say most of them, even if you look at the yen, in general, all of the pairs, I know that's something that most of you don't want to hear, but or don't like to hear, but I don't like many of the currency situations. The yens, most of the yens, except maybe the EJ, neither. If you look at this dollar yen, it's just stuck between these levels and not so appealing to trade. So I was scanning maybe close to 20 currencies, and the best I could do was really the Euro CAD, Euro Yen, and Pound Odd. And even those are, as Ed said, it's not maybe the best ones in general if you compare it to other, days and points. Although I do like the Euro Yen. That's probably my favorite. Kaylin is asking if we can short the Euro odd at 39. Let me take a look. 39, that's quite far from here. That's 400 pips lower than here. Is that correct, Kaylin? Oh, shorting. Okay, Kaylin is asking about shorting here with a target of 39. Sorry. Well, maybe you know my answer already, Kaylin. What do you? It's difficult. As I said, I wouldn't be looking for shorts yet above this support level. So, I mean, would I recommend it to you? If I wouldn't do it, well, it's easier to recommend if it's not my money, I guess. But still, I don't know. I mean, it would be early, in my opinion. Could it work? Yes, it could. I mean, in fact, we could always take a buy and sell at any point in time. Nothing limits us from that. It depends. Me, I wouldn't recommend it personally, as I already said earlier. But it all depends on what your trading plan is. What is your trading strategy? Do you have a specific trading plan for this that fits the bill? Then nothing, I guess, should be stopping you from executing that part of your plan. But in my opinion, it's too early. I mean, I understand the logic of it, but as I said, I have a very strict definition of what is trend, and to me, it's still above critical support. That's why. And as long as it stays above critical support, the likelihood that it still pushes up a bit is high, or is at least good enough for me not to attempt to catch a earlier sell here than upon the break of the critical support, which is around 141.70, 141.90. All right. So I'm just thinking, trying to see. I want to advise you as good as I can, but there's also one more risk that we are going to make an extended sideways range. As Ed has been saying, we're in summer trading. Breakouts might be highly unsustainable, and a move back maybe to the top of the range is equally likely, for example. So something to consider as well. Maybe if you would short right below this, right at the top of this range, closer to resistance, would make more sense, like at 143.30. All right, that's what I'm thinking of. What do you think, Galen? What are your thoughts now? All right, I would like to hear what you were saying. Let me take a look at EJ, by the way. Where's EJ? This is interesting for me because it is about to break a 5-minute high here. Not the high, but especially the trend line is interesting, right? So I'm going to put a market order here. Not a market order, a pending order, sorry. Now, we have to realize that breakout trades could definitely be more risky nowadays. Take a look at the spread. The spread is only less than a pip. Wow. So if you're jealous of those spreads, take a look at Admiral Markets, okay? And open accounts. I will put the stop loss. Tempted to use a tighter stop loss, but probably a wider one would make it safer. Um, mm, 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 mm. Well, even the wider one is still less than 30 pips. It's not that bad. So I'll probably go for the wider one just to be a bit more on the safe side. Although I like the, maybe if the 5-minute fractal would be lower, but I will aim for the 618 target for the moment at least. Let me see how much this would be. All right. So let's see if that breaks or not. It might give a bigger retrace to the downside before it breaks. Doesn't have to happen right now, or in the next 30 minutes, in fact. But it's interesting for me enough to already put a pending order there. And if it does break, then I don't have to necessarily keep an eye on it, and we can look at other stuff. So that I'm not boring you in the meantime. Otherwise, I'll have to always have a half an eye on it. We're moving down. Looks like we're finding some resistance there. So, but that's the idea. So I would try to take it a bit earlier than the 1 hour break in anticipation of the fact that if we were breaking this fractal level and this trend line, that would give enough momentum for it to hit the target. And I won't break, in that case, when I wait for this break. And we'll put the stop loss, just a usual 50-minute fractal here. It's probably a 1 hour fractal as well. Not yet, okay. Let's see. It's almost a 2-to-1 trade, which is okay. And the entry of the trade, well, depends, of course. I would go 1 pip. Depends on your, hopefully you have Admiral Markets, but if you don't, it depends on the spread, of course, that you have with that particular broker. But the idea is that the entry would be above one or 2 pips above this high here, plus the spread, right? That's something you have to take into consideration yourself. All right, so let's take a quick look still at the Euro odd, because Kalen was talking about the potential cipher pattern. And well, yeah, I'm not a big fan of these types of patterns. Now, I'm not saying they don't work, but it's just that I don't really actively use them for my trading. It is true that if you look at this upside, you could see here kind of like a very big push up, retracement, and then just a minor break. And if we then move down, for example, to something like that, that could definitely be a pattern like that. But yeah, it's as I said, I'm not that focused on it, so I have not much experience with it. It's not something I actively use for my trading, so it's difficult for me to comment. I look at other stuff, and what I do see is divergence between these tops. And what I do see is a pretty strong down move and a pretty slow up move, which to me could signal this. All right, but the reason why I'm cautious here is still just because it's above support and resistance. And in my trading plan, and that everyone has their own trading plan, is I am very keen on finding key support and resistance and support and resistance in general, and I want to trade with the trend up to support and resistance. So it's a very easy trading plan, and if I look at the current situation, then this doesn't qualify. So for me, that's why that's how I simplify my trading. If we were to break these levels, then things change, and I will trade it to the downside. Anything above here, in my opinion, is early, and even if you just analyze the currency, why not? Why couldn't it move back to these tops, for example? You know, even if it's a cipher pattern, for example. That would be my thinking. The problem is that you could really literally do thousands of types of analysis on any currency. And many will be right, many will be wrong, but it all depends what you do with that information and how you trade it, and when you not trade especially, and when you do trade, what you do. In fact, you could make supportive arguments for a lot of things, let me say it this way. I'm not saying that the cipher pattern would not be a good argument to trade, but it all depends what you know how that fits in your trading plan. I'm just saying that a cipher pattern alone would not be enough for me to take a short here, because if you use that type of analysis, you could justify a lot of decisions without probably being profitable, if you see my point. There would have to be more than that, and probably there is, in your opinion, Kalen. But I guess this was just the main element, and you know I understand that if you were to write down all the elements, probably it would take ages to write down everything as well. So I understand that. What would be my usual stop loss for the euro yen? Yeah, that usually would be the opposite fractal of the same time frame I'm using. But in this case, because the opposite fractal is here, then I might as well use the 50-minute fractal, not the 5-minute fractal, but the 50-minute fractal, because it's so close to each other. Then I'd rather use the fractal of one time frame higher to get a bit of more safety in that. But usually I use the fractal of the same time frame, but it's kind of a mix. It could be the 15 or the 5-minute world. They're actually if the currency would have moved to the upside, it would have broken both resistance levels of both time frames in a way. So usually I do use the stop loss of the same time frame though. Yeah, Mohammed, we're gonna actually from August we'll be having one session a week that's only focused on intraday / scalping, which will be Thursday. So Thursday 8th of August will be the first one, because next week we won't have any sessions. I'll take 1 week off as well, but I'll be back pretty soon. On the 5th of August, we'll have our usual sessions. Actually, the 6th, Tuesdays we'll be looking at swing trades. The 7th, Wednesdays we'll be looking at everything, and Thursdays will only be at intraday. Kayla, that really depends. The stop loss really depends on which time frame the trade is, geared towards. I tend to take a wide variety of time frames, but my personal preference is 1 hour, 4 hour. And those stop losses tend to be a bit bigger because of that. Like they could be between 50 and 100. And sometimes 4 hour charts could be more than that. That's why I do like 1 hour charts, maybe a tad more than 4 hour, just because the stop loss is, you get a bit more tighter balance there sometimes. But if we will be on Thursdays, if we look at intraday trading, then the stop losses will be probably around 15. All right, so. But we're going to split them just to make it more clear, so that everyone knows what to expect in a session. And also, I tend to look more at swing trades. So, and I would easily move on to that. So if the session is only geared towards intraday, then we will stick to that. Alrighty. Well, you know, this is always the thing with the currencies. Once you are hoping for a break, it always take longer than you think. But it was definitely in the cards that it could make a retrace. The thing is that once it moves up like this, you know, there's always a chance that it retraces before it actually really breaks. There's always that chance. We do have a pretty nice wick, I guess. 5-minute chart, you can see that 2 bullish candles. So maybe this would be the bullish signal for that breakup. All right. Anyhow, let's move on because nothing else to add here than only to monitor and watch. So let's take a look at the Aussie. It's definitely interesting. Good idea, Caleb. Let's see. Definitely at a high resistance level here. We have the support line right in here. So it's like a wedge, but it looks more like an ascending wedge, doesn't it? Because we clearly have tops that are quite equal to each other. It's not totally horizontal. We have higher lows that definitely have an angle to it. Looks like a good 45-degree angle there, actually. So in that regard, you know, if anything, it looks like a ascending wedge. Now, if you look at maybe the horizontal levels, the last key level could be 93.40-ish. This level is around 93. Those are key horizontal resistance levels. But looking at the fact that this is basically an ascending wedge, a break to the upside, even though we're in a massive downtrend, is becoming quite likely. And if you do Elliott wave analysis, you can see that we had a wave 5 of 3 maybe here finished. We think this could be wave 4, and wave 4 the entire move down. And you look at the entire move down, the 32 fib is a high key resistance level, which is at 96, and that level ties in nicely to this resistance level as well, which is the wave 2 of wave 4. No, wave 4 is here actually, ties into wave 4 as well. So anywhere between the 32 and 50 could be bouncing spots. The 382 maybe a bit more likely than the 50. And an up move to those resistance levels seems likely. But the thing is that even though we're on an ascending wedge, we're right at that resistance level. And, oh, what was that? So, you know, going and anticipating that break to the upside right in front of the resistance makes no sense at all, in my opinion. The only thing, in my opinion, that could make sense is either wait for the break of the resistance and a hook back, or, and this is a lot more riskier, is let the currency move back down to support and anticipate the continuation of this ascending wedge to the upside. But that's still very risky just because of the fact that we're in a downtrend, and that can be highly risky. An upside is definitely better if we break the resistance first. Key level also, if that entire analysis and maybe the entire ascending wedge is worthless, is, for example, if we break the support level, then maybe we're just back in the downside. All right, so this area is kind of neutral area. Anything below 91.80 is getting bearish. Anything above 93, 93.40 is getting bullish area. That's how I would split the currency into these zones. So the trend might be changing, Kalen, but we need more evidence of either of the two, in my opinion, to make a conclusive case for either of the two sides. I mean, looking at the pattern, ascending wedge, I would say there's definitely a fair chance that it is changing, but I wouldn't anticipate that yet at this spot. All right, let's see, anything else I want to add to this analysis? Well, you can see pretty big projection hourly wick here, right off that trend line and more or less double top in the 1 hour chart. So the upside is having trouble, even though the currency has traveled to the upside a lot. As you can see on this 4 hour chart, the currency has moved pretty impulsively to the upside here. It is finding difficulties just because we are close to the resistance, right? If you look at price action on the 1 hour chart. Okay, let's take one more look at other currency. Please go ahead and make your choice. Oh, we have to take a look at the euro actually. Ed has a question about, or actually a statement first of all, that he says he looks at closing levels in the market, Forex market, global indices, S&P, gold, and where the US dollar index is, and then overlays fundamentals and market sentiment, and then makes his own interpretation of technicals for the bias of his week and daily. That sounds very nice, and Ed is asking what I do. Well, basically, I don't overlay fundamentals over that. It's not so that I ignore fundamentals. It's just that I don't factor. I mean, certain things are so static, like interest rates. You know, they're just a given. I'm aware of those. It's not that I ignore those, but I look at fundamental announcements. I look at those figures, but it's not the driver of my trading plan or my trading decisions. I'm aware of those, but they don't influence or impact me. So there's a difference there. Otherwise, I just look at all the Forex markets. I look at gold, silver, oil, and indices, indeed. But I only trade Forex. Yeah, that's it. And I just look at all the time frames and currencies to find technically set up positions, currencies that are set up well for my trading plan, basically. That's my core focus of trading, and only the dollar index, gold, and these are just as an indication of a broader analysis, but they don't really influence any trading decisions. Let's take a look at your dollar now. Your dollar had couldn't break that resistance level, that red line I have here. It was a magical red line because buyers were scared of it. They saw my red line, I'm just joking, and they were like totally freaked out from it. So it did move down. And let's see how the 1 hour chart looks like. Now, that's why I wanted to wait for the 1 hour chart. It does have a bit of a wick here. Is that wick holy? No. Is it encouraging? No. It's a bit neutral, right? It's half of the candle. The bulls couldn't remain in control to the end of the hour. So, yes, we had a pretty good up run here on a shorter time frame at least. But we had a pretty big downside too. So it doesn't look like that upside is going to start soon. I think that if we were to break above this red line, things might change. Otherwise, looking at the current setup, I'm looking at a potential smaller wedge on the 5-minute and later on a break, most likely to the upside. Although you never know. If we were to break above this resistance line, then things were to change. But at the moment, I've seen this pattern more often. If we make this bigger downside, something like this, and move up, we'll most likely respect this top. See it go down, then most likely respect this bottom still. We'll see it go up, and we'll probably be building a wedge. That could take some time. I mean, could take at least an hour or two, probably. Now that might be wrong, and if we do break above 132.06, things might be totally different. And the currency outlook could be different than I expect, and we might make that upside. Is it a great upside? Not really, but it definitely could make a continuation here for some pips to higher 132 areas. All right. But I don't think that's going to happen in the next 5 minutes. So that's not going to happen in our session. Let's see, the euro yen isn't breaking. Let's take a quick look at the euro New Zealand, the last few minutes here. Alrighty. Interesting double bottom and break of this trend line right to the upside. And let's see if this, no, not here. Did stop at this 50 fib of this last down move and right at the moving average. If we were to put a fib on this upside, came pretty close to the minus 618 target here. All right, so that could be either a 1, 2, 3 move up finished, or it's a downside, or this is just in fact 1, 2, 3, 4, and we have one move up. Looking at the weekly oscillator, that was pretty powerful. So maybe a break of this top still is not that unlikely. If we were to fib that up move here, we bounce off the 382. We bounce off these broken tops. So either this is a hook back for more, or if we were to break this bottom, then we're back in the downtrend. So that key support level is quite far from here. It's 162.20. So that would require a lot of patience to wait for that break, but that is a key level for sure. Now, if we zoom into the 4-hour chart, either this was an up move, this is a bull flag, and we're going to continue to the upside after this 382 bounce and make a wave 5 and break this top. That's one way of looking at it. Or this was a down move, this is a retracement, and we're going to break and go down. But in that case, a 162.20 is a key. Even this 164.30 yeah, that would be the key support. Now, if it were to move to the upside, then this trendline break would be important to signal that, because that's the top of the potential bull flag that we have here. So those would be important. And of course, logically, the resistance as well, right in here. So this looks more like a bouncing area to me, just because we're getting close to the support. Even if it were just a bounce to, for example, the top of this trend line, where it could get resistance again, then the question is, will it break, or will we get a downside? Then it becomes a bit more unclear which of the two. That depends on how the bigger time frame would look like, but that's my view. I think the best trades are under this level, or the bigger bottom, or at least below this bottom, or a break upon the bull flag, or a bounce off this trend line. All right, those are the best situations. Or even a bounce right here for upside. All right, now which one is the best? I would say probably this one here when we break the bigger bull flag, and the rest are probably equal to each other, I would say. 786 bounce, and it looks like we're breaking above the 50-minute fractal here. So that could be pretty interesting, actually. That could be pretty interesting. Either a break above this level here, or if we do go back down and test this bottom, a speculative buy right in here with a very tight stop loss could see a pretty big reward to risk there. Let's see. Kayla, let me know if that makes sense, or if you're looking for something totally different. In the meantime, Ed, yes, I would think so. We can take a look at gold quickly. I need to shoot off though. Actually, I needed to leave on time today. I have to organize something. But the gold is really funny in a way that it went all the way to the 618 fib. So looks like, I don't know, a bit of stop hunting maybe. I don't know, but it definitely goes a bit higher than I expected. So either this is the max level, I would say, of what I expected, the 618. I expected, more likely I found a 50, but 618 was the highest fib level I expected, and this blue line, as you can see. So if it were to break above that blue line and this 618 fib, then the analysis that I had is something else is going on. It's invalidated in a way. The very key level of invalidation is this 1423 level, in fact. But if it were to break above 1340, then definitely I think something else is going on than I expected. It has reached the max limit of what I expected. If it now moves down, it still fits within my analysis and what I was thinking. If it moves up from here, then it distorts that, then it's different. But the major level where the whole thing for sure is invalidated is this level. Now, if it were to indeed move down, which seems almost looking at price action very hard to believe, but if it does, then breaking below 1270, this support level would be the indication that we're back indeed in that wave 5. Graham is saying that trying to get the hang of using fibs, but sometimes is a bit unsure where the top, the bottom and tops are in the trending market with zero fractals. Yeah, that's difficult, Graham. I can see that. That isn't the easy thing. What I do is most of the time either wait for the target to be hit or wait for the AO to retrace back to the zero line. So in this case, where we're looking at this 1 hour chart, you can see that at first we had this fib from the top to bottom, and that was the first fib. But once we break out of this resistance line, I started to use a different fib than this one because the likelihood of the currency going back to that level is small. So then I started to use a fib within this zone just because of that, okay? And if you then look at, let's see, I used this level. That was a bit iffy, as you see. We broke out of this trend line. you could have easily used this one as well, which would have been more safer. And you can see 618 would have been hit, or if you would have used the tighter one, which I used from here, this 886 was hit. So it definitely depends. Normally I would wait for the currency to hit the target. Now as you can see, when you use the new fib, this new one, and 618 was hit, I wouldn't start. You could start using fibs on here, but those are fibs within the fibs, right? And becoming a bit more iffy. But probably, in fact, if you would fib all of these up moves here, they in fact all would have worked, because all of these fractals had higher lows. So even if you fib these smaller moves here, they all would have worked, in fact. But they're more risky, because the currency could break one fractal, move a bit lower, and then still bounce up. They didn't here. It was consistent higher lows from here onwards, but that is more risky. And we had a very nice trend channel here. So that is a bit more difficult indeed. I can see your point. If you want to be more conservative, you want to take a look at the AO, where the zero line starts here, where the zero line hits again is here. That swing high, that move is one swing high, swing low. You can use the AO for that. The next criteria is that once you hit the 272 or the minus 618, you could start fibbing this move. Right? Those are more conservative fibs, but you can. There's nothing that says that these more aggressive fibs within this move doesn't work. But in fact, you're using the 50. That's actually more 50-minute fibs within this move up. If you're unsure, always better to take a bit wider fib and use the swing high, swing low, like this, from bigger tops to bottoms. Just visually try to eye which move is one move, like this, and then a bigger correction. This is one move as well, in fact. That's something that would require maybe a bit more explanation. I hope that it gives you some guidance at least. Okay, I didn't mention any target, Kalen, on the euro, but I think that if it does break 132.75 is the 786 fib. So maybe that could be a level where we could go to. But let me take a look at this 618 target. You can see that we stopped here at the 272 target. So the minus 618 target is at 132.83 indeed. So that ties into that 786 fib at around 132.80 indeed. And if you look at the 4-hour chart, no, yeah, that ties in to that. Euro yen is moving up, so let's see how that goes. Here in New Zealand is breaking, so that could be a bounce trade right in here actually. All right, it's like a break of this line. The target would be anywhere in here, which is the resistance area of that bull flag, where we could definitely see it move down and then either up again or down. All right. That would be the target anywhere in here. Depends how aggressive you want to be, but it's a decent reward to risk box. Sorry, I'm losing my voice after almost 2 hours now. So let's see. It is it's not the safest trade just because there was a pretty good down move, but a bounce is in the cards. If it moves too slow and does something like this and makes a bear flag, then I would take it off. All right, because then it doesn't make sense to leave it on if it takes too long. It has to develop in a reasonable time factor. Otherwise, the up move isn't strong, isn't impulsive, and it's in fact looking more like a bear flag, and we could see one more drop in that case. Alrighty, folks, I will have to round it up now. I hope to see you tomorrow on Wednesday the 24th, and wish you great trading today. the rest of the day. And be careful with that summertime trading. Indeed, it makes things a bit more trickier and riskier. Okay, and otherwise, I wish you a great day. All right, cheers, everyone.